We're taking a look at a really detailed analysis report on new BURU, or BURU.
Right. It's titled Defense Tech Revolution, BURU's Massive Pivot Explained.
USA.
And it really breaks down this super aggressive transformation plan.
They're trying to go from, an industrial laser company to a full-on defense and security player.
Exactly, all through M&A and leveraging that unique blue laser tech they have.
Okay, let's just get straight into it.
Let's do it.
So the report kicks off with a really strong case for the financial potential. It highlights a $500 million order portfolio from Techne.
And it's targeting that massive, $19 billion electronic warfare market.
So right out of the gate, it's a pretty compelling financial story. It is, it's very compelling. But I wonder, how robust is the look at the actual risks involved?
You mean when you're buying companies that are bigger and more complex than you are?
Exactly that. And I think that's the first place this analysis can get even sharper. The material needs to integrate the complexity of executing these deals right into the discussion of the acquisitions themselves.
Okay.
You need to build a more balanced, sort of contrarian angle throughout the whole piece.
Right, because as it stands now, the analysis kind of isolates all the big execution risks.
Yeah.
Like the golden power regulation thing in Italy and just the sheer scale of doing all this with the new dual CEO structure.
And it saves it all for the end in one concluding section.
Right.
And when you do that, it almost feels like a disclaimer, It minimizes how serious those roadblocks could be.
And the reward, the upside, it only really means something if you weigh it against how hard it is to actually get there.
Precisely. If the whole pivot is about M&A speed, then analyzing the execution of that M&A, that's the whole ballgame.
Well, hold on. Isn't it cleaner, structurally, to just put all the headwinds in one dedicated spot? Why mix the political risk in with the good news about the acquisition?
Because the deal is defined by those hurdles, especially in defense. You're talking about a $500 million backlog from Techne SPA. They deal in military vehicles, electronic warfare.
Pretty sensitive stuff.
Incredibly sensitive. So that opportunity is completely tied to navigating a foreign government's veto power if you don't frame it in the context of Italy's golden power rule right away.
You make it sound like a done deal.
You make it sound like a certainty when it's anything but.
That's a really sharp point. It changes the story from just, processing paperwork to management actively fighting to secure that value.
It elevates the whole narrative, and you can deepen that even more.
Okay.
The report already mentions they brought in this dual CEO structure with Zamboni and Barassoni.
Right, to manage this whole M&A blitz.
So here's the suggestion. Use that fact. Use that leadership structure as direct evidence of the high execution risk that management itself sees.
So the structure is a tell.
It's a huge tell. It shows they know this is a high-wire act. And including that deepens your analysis of the complexity. And it makes their success, if they pull it off, seem that much more impressive.
Okay, that definitely strengthens the intellectual rigor. If the team is structured defensively, the analysis has to reflect that tension.
Exactly. You show you understand the politics, the complexity of moving fast in a regulated space. That's everything in defense tech.
All right, so we've covered the structural risk, but let's get to the core tech. Is this pivot even justified by the product?
Good question.
Let's look at the part about the secret weapon, the blue laser advantage. The report notes it's good for naval comms, travels through water better.
And for precision counter-UAV stuff. Yeah.
But building on that, is the connection between the old industrial tech and these new defense uses really, truly established?
That's where I think we can bolster things. Why the pivot?
Right.
The analysis needs to dedicate a focused comparison. It should use its deep technical expertise to really contrast the economic and operational value of the laser in its old industrial life versus its new military one.
I see the weakness now. The way it reads, it just kind of briefly mentions the industrial use, like welding copper or gold.
And then boom, it jumps straight to electronic warfare and SEMA.
Yeah, and that jump, it misses the chance to explain why this is such a high-margin move for the technology.
It leaves a bit of a gap in the logic, It makes the whole reinvention feel a little opportunistic, instead of like a strategic necessity.
That's a good point. If the blue laser was so great at welding tough metals, why didn't they just dominate the industrial market? What was pushing them to transform?
That is the exact question the analysis has to answer, explicitly. Industrial welding is a volume game.
Brutal margins.
Brutal, compressed margins. But defense tech, especially something complex like SEMA, which is, the non-kinetic battle space jamming surveillance.
It's a totally different economic model.
Totally different. You get scarcity premiums, huge R&D contracts. So the suggestion is, first, highlight the technical transferability.
You mean like show the engineering lineage?
Precisely. Show that the same precision engineering it takes to weld copper effectively, that superior absorption, is exactly the kind of high-stakes experience you need for military applications, like targeting a tiny sensor on a drone. You show the factory floor precision is the credibility for battlefield precision.
And then you immediately follow that technical bridge with the financial reason.
You have to. Anchor the whole shift using the concept of margin.
Okay, so a concrete example would be?
You literally contrast the price point and market size of industrial copper welding with the target $19 billion electronic warfare market.
Right.
That move from a niche industrial application to a massive defense market, that's the core economic thesis. Showing that margin expansion is the narrative payoff. It turns the report from just a tech review into a really compelling business strategy document.
Got it. Okay, let's move to the third critique, which is about the structural flow.
Right.
As I understand it, the material lists the three key acquisitions, Techne, the Maddox Defense JV, and Orbit SRL, as sort of equal pillars of the master plan.
Which is, technically true. But does that structure really maximize the impact?
Is there a better way to organize it?
I think so. The idea here is to refine the structural flow by prioritizing the acquisitions based on their immediate financial and strategic impact.
Okay, I think I see where you're going. We are burying the lead.
You are absolutely burying the lead.
The weakness right now is that by listing them all equally, you dilute the importance of Techne.
The one with the $500 million order backlog?
Exactly. That's the catalyst. That's the thing that could immediately prove the pivot works and totally change how the market sees them.
Right now, it just feels like an itemized list.
Yeah.
When it should feel like a story building to a climax. The suggestion is to restructure based on impact. Build some momentum.
So you lead with Techne's SPA.
You have to lead with Techne's SPA as the definitive proof point. You link its $500 million backlog directly to the payload you promised.
That gives the analysis instant credibility. It hooks you with the biggest number right up front.
Exactly. Then you need a strong follow-up, a midterm story.
Which would be the Maddox JV.
Perfect. You present the Maddox Defense joint venture, drones projected at about $100 million a year by 2028, as the midterm growth-focused piece.
So you go from existing backlog to future growth potential.
You transition smoothly from what we have to what we're building. And then you bring it home with the specialized piece.
The software component.
Shows diversification beyond just hardware. Correct. You place the Orbit SRL SaaS acquisition for operational resilience, the cyber and software part, last. Frame it as the high-margin defensive tech that completes this new diversified profile.
So the sequence becomes immediate validation, future growth, and finally, strategic completeness.
And that